up, guys? This is the Action Accountant, and today we're kicking off a new series for an introduction to investing. And we're going to break down the very basics to help you feel comfortable buying your first stocks. Today, we're literally going to talk about what is a stock and why am I going to buy one. Let's dive in, shall we?
This video is for entertainment and informational purposes only. It does not constitute investment advice or advice on tax or legal matters. The Action Accountant is a certified public accountant in the state of Washington.
For starters, a stock, quite literally by definition, is a piece of a company, a public company. So you can't just go buy a piece of stock from Joe's Corner beer shop, no matter how much you like the beer. You're only able to buy companies that have gone public, which is an entire process, and you hear about that on the news all the time. So, for example, I think the big one that's coming up right now is Coinbase, which is the big provider of Bitcoin transactions. They're about to go public, and so if you're interested in something like Coinbase, you could, when they go public in next week, I believe it's on the 14th or 15th, you would be able to log into your brokerage and say, I want to buy one share of coin, or whatever the ticker is. Next, let's go ahead and talk about why should I buy a stock, or why would I buy a stock, either way. And I've got 5 reasons to kind of talk about that, and then a couple other ideas that we'll talk about as we go through that. First off is literally, I just like the stock, or I just like the company. And this is the Robinhood approach. And this is the reason why almost everyone first gets into quote unquote investing. And Robinhood has really made it accessible for people. And for that, I have to applaud them and not give them too much fault. Basically, Robinhood made it so that way you could open up a brokerage in a couple clicks on your phone and link your bank, have access to some cash, and you can literally play Tinder with the stock market. You can pull up whatever stock sounds interesting. You might be in line at McDonald's and like, man, this Big Mac's fire. And you can swipe up and own a share of McDonald's. And it just really makes it easy. The one that's most popular right now for this year is absolutely GameStop, and kind of the other quote unquote meme stocks, that'd be AMC, BlackBerry, a bunch of other ones. And basically, people have gone through and bought GameStop because the quote unquote they just like the stock. And obviously there's more to the story than that, and we're not going to dive into that today. But there was kind of belief that there was going to be a giant short squeeze, which did in fact happen in some way, shape, or form. Even though the company itself isn't necessarily healthy, big picture, it's not necessarily making money, and it shouldn't necessarily have gone from $5 a share to $400 over the course of a month or a year. But here we are, and people are just buying and selling the stock based on Robinhood. Really easy. Next is you want to buy a company because you believe it's going to grow over time, or they have something that's going to really change how things are done. My example for that, and we're going to zoom way out, is Apple in 2008. If you were born in 2008, maybe, that is exactly right around when they introduced the iPhone. And Steve Jobs said we had something special. And hey, we're going to change the way people interact with each other. And boy, was he correct. If you look at the stock over that time, and I can distinctly remember watching the TV because I was back in college and listening to kind of what was going on with the stock market crash back then. I remember Jim Cramer yelling, screaming, and hitting his button and saying, buy Apple, buy Apple, buy Apple. And I think it was probably his best call of his life, because the iPhone really did change everything, right? So if you find a company that is introducing something that is just going to change how business is done or change how people interact going forward, that's a valid reason to buy and hold a company, right? That's called growth investing. Hey, this iPhone is something special. I'm going to buy it. And then over the next 12 years, I'm going to 30x my investment. That's pretty good. No one's going to complain about that. Next, similar, opposite, is it's undervalued. And so you're going to go ahead and say, hey, this company, and I'm going to use Pfizer as my example, is not worth as much as I think it should be. Now, that's kind of a bigger concept that we're not going to be able to break down right now. But the idea would be, hey, Pfizer at the end of 2019, beginning of 2020, was worth $40 a share, at a market cap of X. I don't know what that is. Cool. Before a global pandemic and before this vaccine that's generating 30% revenue growth for them for this year was worth 40, and now it's only worth $35. And you can scratch your head and go, that seems really weird. That seems undervalued to me. I want to buy and hold this company until it appreciates and realizes its value. Now, again, there's a lot that goes into what I just said, but I mean that's still a valid reason to hold a company. Next, you would buy a company for income. Now, this is not going to affect millennials a ton. This is really more of the after you have a nest egg, you're going to become really interested in income generation. But the idea is, in particularly, and people target utility funds. But the idea is a company that's profitable and kind of well established oftentimes starts to pay a dividend. And what is a dividend? A dividend is a return of earnings to the shareholders in the form of, in some cases, a literal check, but a deposit to their brokerage account. And basically, a lot of companies have determined that over time, instead of trying to pour money back into the business and growing it and reinvesting it, they just want to get super efficient with their operations because they've kind of carved out what they're going to do. And over time, they're going to commit to paying a bigger dividend every quarter. And so that way investors can start to rely on and expect that dividend. So the example right here is Duke Energy, which is a giant utility. It's one of the three biggest utilities in the world, or not in the world, in the United States. And basically they go through and buy up utilities all over the country, add that to their portfolio, and run them, and then they just keep increasing their dividend. So for example, back in 2016, they paid 85.5 cents per share every quarter. Then 2017, they started to pay 89 cents. Keep going forward. 2019, 92.75 cents per share. 94.5 cents, and now I think we're all the way up to 96.5 cents. So they're increasing the dividend 2, 3, 4 cents every year. And for someone that's interested in just kind of, I want to rely on some income, and I don't want it all in a savings account that only pays 0.5%, they could buy something like Duke or other utilities or even a utility fund and know that they can count on for all intents and purposes a 2 to 3 to 4% return on their money. And have access to that. Also knowing that it's inflation protected because these guys have been committed for the last, I don't know for Duke specifically, but there's companies that have literally increased their dividend for 50 years straight, and some that are even more than that. And that's how they want to return value to their shareholders. And that's a reasonable way. All right, and then last but not least, and I don't want to confuse this with investing because it's not. Some people make a job out of day trading, out of trading companies. And that's called momentum, or in some cases they use the word pattern day trading. And what they're doing is they see a company and they watch its chart and they check in the morning and see where's it at, what's it doing, how much is it up, why is it up, and they start to figure out where can I enter and exit this position, whether they're trying to they can make money either direction. They can make money on it going down or they can make money on it going up. And they are watching the charts and figuring out, hey, is it topping off? Is it done going up? I'm going to sell it, and they're going to sell it, and then they'll buy it back. Or opposite, hey, it's dipped down quite a bit. I'm going to buy it as it rides up, and they're going to sell it. Now, again, the reason why this is not investing is because the people that are doing this is literally a job. This is a day job or an hour job. They might literally only hold this company 1, 2, 3 minutes, maybe a couple hours, and at most a few days if it's what's called a swing trade. Swing meaning you're going to ride this momentum up or momentum down if you have kind of reason to believe it. But these are all kind of the core reasons that you would ever just buy a stock. Now, I think that's pretty good for what we're talking about right now. I think what we're going to dive into as we continue this series is we're going to break down. Obviously, right now I showed you some charts. We talked about a couple of very specific companies. In the next section, we're going to talk about how do you actually look at a company before you click buy or swipe up on Robinhood. And I think we'll continue this series for a little while, and we'll start breaking these videos down. I'm excited to do that. I'm I've been snapping awake early on my streaming days. I've been having so much fun doing this, guys. And so I'm excited just to break things down and give access to some knowledge that I've had and break it down in a digestible, meaningful way for you guys to dive into it. If you would like to hop on and join me on stream, I'm streaming on Twitch every Thursday, Sunday, and Monday. Monday and Thursdays at 6:30 in the morning, so that's right when the market opens Pacific time, 9:30 Eastern. And on Sunday night, I stream at 8:30 p.m. And at that point, I am hopping in and doing market research for this week, so that way I can get ready for all my upcoming trades for the week. And I break down kind of what I'm doing, why I'm doing it. So there's lots of ways to learn from there. You can catch me at twitch.tv/the action accountant, and any like and subscription and comments that you leave on these videos is very helpful to help kind of get some momentum going. I really appreciate you guys, and we'll look forward to talking to you in the next video.